pretty neutral to, you know, there's no particular interest in what we saw there. So what else are we looking for? Well, we're looking obviously for the dealers actually putting some sells onto the trade. So when we look at what the sells are, we can understand something very, very interesting at the top edge here. We can see that the sell book starts showing up here. Now, how does the sell book construct? Well, you'll see on the very next candle, these oranges below the bottom edge. What does an orange below the candle mean? Well, that means that they're withdrawing bids. If they're withdrawing bids, that's a good sign. So they're actually not just withdrawing bids, they're adding offers as well at the money. See that? So they're withdrawing bids below and they're adding offers. So that's only going to happen. That's only going to give you one side of a trade, isn't it? That's going to be a sell candle next. And this next sell candle has exactly that same process. They press the price down into that area very, very easily, very readily. And it works out quite nice. It works out quite nice. I mean, you're obviously missing the top print price for that confirmation. But you know what? Sometimes that's okay. You know, you're not always going to get top tick every time. And your job, of course, is to try and just balance out the book and the value and the risk associated with that trade. And when it starts piling in here on the sell side, then obviously you've managed to make some money on the short side. So in other words, just be patient with the trade. I mean, there was a lot of buying on the book at that stage, and there was a lot of buy deltas. It's impossible to fade against that if you've got buy deltas and buy book. Unless you're seeing ICE orders, unless you're seeing ICE orders giving you the big signal and then the big lean, there's no way you can fade against that. Just let it run its course and then join in when the book changes. And the book changes when this orange here, when you see these little orange dots actually right into the price, that means they're pulling away the liquidity on the price itself, and you can see them pulling away the liquidity. And obviously, if they pull away the liquidity, that's a very, very strong signal that the price is going to be going in a continuation, at least short term, to the downside. And whilst it wasn't the biggest move, I think it was about 9 or 10 ticks on the sell trade. 9 or 10 ticks on the sell trade. So the trade that they did opposite was this curve trade here. The trade they did opposite with us 2.5s at the top edge here. We started to see that coming in at the spike higher on the 2.5s. They broke the cover here. And you can see obviously that was the bottom edge of bonds. So if you know that you're going to be able to sell the 2.5s against that overall position, so you're selling the euro dollar and you're selling the 2.5s, what are you buying? You're buying treasuries at that point. So there's the opportunity to buy treasuries. And obviously you buy treasuries at the same time as you're selling the euro dollar. You're taking advantage ultimately of that spread trade, aren't you? So you can take that trade as a spread trade, buying bonds and selling euro dollars. That is a spread trade.